Welcome to MOOC's Open Online course. For today's lecture, we are going to discuss about budget and the constitutional provisions that are mentioned in the Indian Constitution. It is very surprising to see that the word budget does not appear in the Indian Constitution, though we all know that budget is a word that gives out an estimated income and an expenditure for that year, usually for India, which is between the 1st April to the 31st March, which is called the fiscal year of India. A small introduction. Until 2016, the general budget and the budget for railways were presented differently, and since 2017, railway budget has been merged with the union budget. The president usually fixes the date for when a budget would be presented to the parliament. The Indian budget since 2017 is presented on the 1st of every February. The exceptions are that during a year when the Election Commission of India fixes election for the nation, the budget may be presented twice. References to budget in India has been mentioned in Kautilya's Arthasastra, where the chancellor is expected to estimate the amount of revenue a nation could generate. That is the picture which you see the members of the Constituent Assembly sitting and deliberating for the future of India. Very senior patriotic gentlemen of India sat together for more than a year discussing minute details of what would govern this nation, because Indian Constitution is a written constitution. A written constitution is a symbol of civilization. The rule of law that prevails is a symbolic representation of civilization. Monarchy has been overthrown. People's voice are heard in a democracy. And these are the people of India who sat, debated, deliberated for days together, planning what should govern this nation of India. These are the people who wrote the Indian Constitution. You could see prominent leaders like Nehru, Dr. Rajendra Prasad, Vallabhbhai Patel, Ambedkar and others. Ambedkar is more prominent in these pictures. These are the people who wrote the Indian Constitution for others. These are the women members who also played equally an important role in the making of the Indian Constitution. These are the women, because it is very nice to know that even in 1945-46, women played an active role in writing the highest law of the land. A small outline just to understand. We are going to discuss about money bills found in Article 110, Clause 1, other financial bills under Article 117, bills involving expenditure under 117, Clause 3, assent to bills under Article 111, annual financial statement under Article 112, voting in Parliament, appropriation bills, supplementary grants, and finally, we will try to do an appraisal and conclude about the provisions to make a budget in the Indian Constitution. We see two major classifications in the Indian Constitution. Everything deals with money or finance, but again, a marked difference is made between money bill and a financial bill. The word money bill is used in Article 110, whereas the word finance is used under two different types of bills under Article 117 of the Indian Constitution. For a simple understanding, you could also say that all money bills are financial bills and not all financial bills are money bills. So, for a money bill, recommendation of the President is needed. That's what Article 110 says. And for Article 117 Clause 1, the permission of the President is required, whereas for anything under Article 117 Clause 3, recommendation of the President is not required. Under Article 110, Rajya Sabha has no power, but any bills, financial bills under Article 117 Clause 1 and Clause 3, Rajya Sabha has power. Under Article 110, the decision of the Speaker is final whether it is a money bill or a non-money bill. But the decision of the Speaker or the approval is not required with regarding to all the financial bills that comes to the Parliament under Article 117 Clause 1 and Clause 3. Under Article 110 and 117 of Clause 1, the President's recommendation is needed or mandated, but the recommendation is not required here. A money bill under Article 110 can only be presented or introduced in the Lok Sabha, and it is applicable to Article 117 Clause 1 also. But whereas a financial bill under Article 117 Clause 3 can be introduced and presented both in Lok Sabha and Rajya Sabha. In case of a deadlock with regarding to a money bill, there is no joint sitting allowed, which means the Lok Sabha and the Rajya Sabha cannot sit together and deliberate. Whereas under any bill under Article 117 Clause 1, which goes through a deadlock, a President of India could summon for a joint sitting, which is also applicable to a deadlock for a financial bill under Article 117 Clause 3. All money bills are mentioned in the 110 article of the Indian Constitution. And finally, the financial bill of Article 110 is part of Consolidated Fund of India. Article 112 Clause 1 says like this: the President shall, in respect of every financial year, cause to be laid before the Houses of Parliament a statement of the estimated receipts and expenditure of the Government of India for that year in this part, referred to as annual financial statement. The word budget is called as annual financial statement in the Indian Constitution. Being a money bill, it also says that it has to be presented to the Lok Sabha first, and it also says that the President shall, in respect of every financial year, present to the House of Parliament. Okay, normally we see a finance minister, that is under Article 77 Clause 3 of the Indian Constitution. How do we interpret or understand Article 112 of the Indian Constitution? Estimated receipts and expenditure of the Government of India covers the annual financial statement. The annual financial statement also separates expenditure on the revenue account from the expenditure on other accounts. The union budget or the annual financial statement is made up of the revenue and capital put together. The receipts and disbursements are divided into three sections in the Indian Constitution: the Consolidated Fund of India, the two is the Contingency Fund of India, and the third one is the Public Accounts of India. Article 77 Clause 3 of the Indian Constitution states that the President shall make rules for the more convenient transaction of the business of Government of India and for the allocation among ministers of the said business. We read already in 112 of the Indian Constitution article, which clearly says the President shall present the budget, the annual financial statement. But only through Article 77 Clause 3 we see every year that Finance Minister presents through the delegatory power of the President the budget to the Parliament. We also see from the year 2003 onwards, the Indian Parliament passed a Fiscal Responsibility and Budget Management Act, so that this budget that is present in India would become a better budget in terms of managing finances, a better governance in terms of finances. And these documents based on this act are also tabled in the Parliament along with the budget since 2003. Article 112 Clause 2. The estimates of expenditure embodied in the annual financial statement shall show separately the sums required to meet the expenditure described by the condition as expenditure charged upon the Consolidated Fund of India. All the expenditure that are charged upon the Consolidated Fund of India cannot be brought to voting in Lok Sabha. And the second category of expenditure is the sums required to meet other expenditure proposed to be made from the Consolidated Fund of India and shall distinguish expenditure on revenue account from other expenditures. So, how do we understand Article 112 Clause 2? Expenditure charged and expenditure required to meet, both from the Consolidated Fund of India. That is the difference between one is charged, the other is to meet the expenditure. The following expenditure shall be charged, which means the charged expenditure, as I already told you, cannot be given for voting. For example, the emoluments and allowances of the President of India and other expenditure relating to his office, Rashtrapati Bhavan. The expenses of these cannot be even voted. President represents the nation of India. President is the symbol of India. Anything that happens is in the name of President. President's expenditure cannot be passed by Parliament. That is the understanding. There are certain high offices which are needed. When you read Article 53, it says there shall be President, which means the country needs a President of India, and his expenses should not be debated or discussed and voted, which will defame the institution of President of India. So, certain categories of people who represent the nation of India, their expenditures are never debated. The second category thus would be the salaries and allowances of the chairman and deputy chairman of Council of States, or popularly called as Rajya Sabha, and the speaker and the deputy speaker, or the office bearers of the House of People or Lok Sabha. And no, these expenditures with regarding to interest payment, sinking fund charges, redemption charges, other expenditures relating to raising of loans and the service and redemption of debt, these come under the charged expenditure with regarding to Consolidated Fund of India. The fourth category would be the salaries and allowances and pensions with respect to the judges of the Federal Court and the judges of the High Court and the judges of the Supreme Court of India. These are charged and never voted. The salaries and allowances and pension payable to the Controller and Auditor of General of India, and sums that are required to satisfy any judgment, decree or award of any court, arbitrary tribunal, and finally any other expenditure declared by the Constitution or by the Parliament by law is to be charged. These are the items which under Article 112 Clause 3 are charged upon and never voted in Lok Sabha. That is the understanding. President, chairman, deputy chairman or the office bearers of the Parliament, debt charges, judges' salaries, Controller Auditor General of India, funds that are to satisfy decrees of courts and any other expenditures by the Parliament. Article 13 talks about the procedure that has to take place in the Parliament with regarding to presentation of the budget or with regarding to the estimates. Clause 1, Article 113 says, so much of the estimates as relates to the expenditure charged upon the Consolidated Fund of India shall not be submitted to the vote of Parliament, but nothing in this clause shall be construed as preventing the discussion in either house of the Parliament or any of those estimates. Clause 2 says, so much of the said estimates as relates to other expenditure shall be submitted in the form of demands for grants to the House of the People, and the House of People shall have the power to assent or to refuse assent to any demand or to assent to any demand subject to a reduction of the amount specified therein. Clause 3 talks about no demand for a grant shall be made except on the recommendation of the President of India. Article 113 talks about the procedure in Parliament with regarding to estimates, and how do we understand? We just read the article. All expenditure estimates must be voted in favor of the Parliament. No claim for funds without permission from the President of India. Article 14 talks about the appropriation bills, which we saw a bill is required. Clause 1 says, as soon as may be after the grants under Article 113 have been made by the House of People, there shall be introduced a bill to provide for the appropriation out of the Consolidated Fund of India of all monies required to meet. The first one is the grants so made by the House of the People and the expenditure charged upon the Consolidated Fund of India, but not exceeding in any case the amount shown in the statement previously laid before the Parliament. Clause 2 talks about no amendment shall be proposed to any such bill in either House of the Parliament which will have the effect of varying the amount or altering the destination of any grant so made, or of varying the amount of any expenditure charged on the Consolidated Fund of India, and the decision of the person presiding as to whether an amendment is admissible under the clause shall be final. Subject to the provision of Article 115 and 116, no money shall be withdrawn from the Consolidated Fund of India except under the appropriation made by law passed in accordance with the provision of this article. How do we understand or interpret Article 114? The appropriation bill with fund request is introduced. Unless it is voted and authorized by the Parliament, money cannot be withdrawn from the Consolidated Fund of India by the Government of India or the Executive of India. 116. This talks about the vote of account, vote of credit and exceptional grant. The House of People shall have the power relating to vote of account, which is nothing but to make grant in advance in respect of estimated expenditure for any part of any financial year pending the completion of the parliamentary procedure. Vote of credit is to make a grant for meeting an unexpected demand upon the resources of India when, on account of magnitude or the indefinite character of the service, the demand cannot be stated with the details ordinarily given in an annual financial statement. Article 116 clause C talks about to make an exceptional grant that is not part of. So, which we see that the without constitutional mandate, money cannot be spent by the Government of India. Article 265, it says, provides that no tax shall be levied or collected except by authority of law, which means Parliament has to approve. Article 266 clause 1 requires that the government to credit all revenues received by it, including taxes and other revenues, into the Consolidated Fund of India unless otherwise provided by law. Article 266 clause 2 requires the government to withdraw money from the Consolidated Fund of India only after it has been authorized by a law passed by the Parliament. How do we understand these two articles? Article 265 and 266. Taxation needs the approval of the Parliament, which means no new tax can be raised without the permission of the Parliament. All funds raised to be deposited in the Consolidated Fund of India. All the money of India is always deposited in the Consolidated Fund of India. Withdrawal of any money by the Government of India only with the permission of the Parliament. Article 270 of the Constitution requires the Government of India to present a statement of estimated receipts and expenditure of each state government, which is called the state budget. This is with regarding to state. So far we saw about the central government, this is about the state government. Article 272 of the Indian Constitution requires the government to transfer certain specified taxes and duties to the states and the union territories. This is with regarding to an instruction or a guideline to the central government to transfer certain money to the state government for its continued survival. So, Article 270 talks about the budget for state governments, and Article 272 talks about distribution of revenue between the federal and the state governments. Article 281 of the Indian Constitution talks about the recommendations made by the Finance Commission. So, which says the President shall cause every recommendation made by the Finance Commission under the provision of this Constitution, together with an explanatory memorandum as to action taken thereon, to be laid to each House of the Parliament. Article 280 is the main article here, which talks about the Finance Commission. So, the President shall, within 2 years from the commencement of the Constitution, thereafter at the expiration of every 5th year, at such earlier time as the President considers necessary, by order constitute a Finance Commission. What is the duty of the Finance Commission? It shall be the duty of the Commission to recommend or to make recommendation to the President. What do they recommend? The distribution between the Union and the states of the net proceeds of taxes, which are to be divided between under this chapter, and the allocation between states and the respective shares of such proceeds. The principle which should govern the grants and aid of the revenues of the states out of Consolidated Fund of India. And then Article BB talks about resources of the panchayats, and C talks about resources of municipalities and how the central government has to make or augment the Consolidated Fund of India to supplement the resources to the panchayats and the municipalities. And clause D talks about any other matter referred to the Commission or the Finance Commission by the President with regarding to the interest of sound finance. How do we interpret these two articles? It talks about distribution of taxes between the center and the states, talks about the grants and aid, resources for panchayats, resources for municipalities, and the recommendations for sound finance. Article 292 talks about the borrowing power of the Government of India. The executive power of the Union extends to borrowing upon security of the Consolidated Fund of India within such limits, if any, from time to time, to be fixed by Parliament by law. Article 150 talks about the form of accounts of Union and the states. The accounts of the Union and of the state shall be kept in such form as the President may, on the advice of the Controller and Auditor General of India, prescribe. So, once a budget is made, Constitution also provides how it would be maintained, how the accounts will be maintained both by the Union government and the state governments. Article 151 talks about how the accounts would be audited. The reports of the Controller and the Auditor General of India relating to the accounts of the Union shall be submitted to the President, who shall cause to be laid before each House of the Parliament. This is nothing but the audit reports. Article 109 talks about special procedure with regarding to money bills. A money bill shall not be introduced in the Council of States. And finally, all these bills, money bills, financial bills, or any other bill, needs the presidential assent. If the President does not approve under Article 111, these will remain a bill and never become an act, and once they do not become an act, they cannot be implemented or executed. So, that we talk about, this is nothing but the legislative control over finance or the parliamentary control over finance of this nation. Constitution provides different constitutional provisions to prevent misuse of power by the executive, and there are parliamentary committees which validate and enhance the quality of budget. Non-obtaining of budgetary provision from the Parliament for payment of interest and refunds of taxes are happening now, which is not a good sign. Deficiencies in appropriation accounts relating to violation of constitutional provisions are also prevalent, which needs to be avoided. Non-observance of financial guidelines have been noticed in the audit. This will impact revenue deficit. Question just to recollect, what is the article that deals with the budget in the Indian Constitution? Who presents the budget to the Parliament of India? When is a budget presented every year? What are the constitutional precautions while preparing a budget? Conclusions. As a concluding remarks, we should say Constitution has provided, or the Indian Constitution has provided for strict constitutional guidelines to various articles from Article 112 to 117. And there are other articles also which deal with the constitutional provision in the preparation, execution, enactment, and implementation of the annual financial statement, or popularly called as budget in India. Every procedural detail is provided in the Constitution, and we expect an accurate adherence by the Parliament and the Government of India, and constitutional precautions are not to be violated for rule of law to prevail in India. Thank you.